Larry, great to have you with us on the program. Your initial thoughts on the numbers?
Thanks for having me. I think initial thoughts of the numbers are a little bit weaker than expected, but at least the catalyst, which was somewhat expected to be a kind of a messy quarter, is out of the way, and so we can move forward from here. So dealing with the material cost issues and the logistic issues and moving forward from here.
Larry, over the last couple of months, we've seen some weakness come into the stock. It's in the crosshairs of the trade fight between the United States and China because of the agricultural issue. Just how much of a risk premium has been baked into the price of this equity, and how much of it should be in the price of this equity, Larry?
Yeah, so there's numerous issues from across the board and macro issues as well. And certainly the material cost and logistic issues were well known since they're the last company to report here earnings, their fiscal second quarter compared to most companies' first quarter. But the trade issues for a big global company like this affect not only the specific equity but also their customers. And they were one of the first companies to sort of take it on the chin with regards to weaker performance in the stock price. And I think a lot of that is largely baked in. However, if we go into a full-scale trade war, I would definitely expect further downside in the name.
Larry, there's some optimism, and just finally, some optimism in the United States that the capex cycle is going to start to pick up. If I want to play this story in industrials, and I know you cover so many of these stocks, do I want to play it through, say, Caterpillar, which has that mining, construction sort of exposure, or do I want to do it through Deere, which has the exposure to agriculturals? Where do I want to do it for that capex story, Larry?
Yeah, great question. CapEx over the next few years looks promising in some sectors and less so in other sectors. I think that there's a pretty fair argument to be made that construction and certainly commercial vehicles and trucks are closer to peak, at least into next year in the case of construction. But agriculture has probably a fair amount of upside over the next few years if a few things happen. Right now, the process of farmers' capital spending is normalizing. Their P&Ls are normalizing. So we're just getting back to a more normal level. But we could see increase in capex from farmers over the next few years once we get past these trade issues and with some help on the commodity side, which I think portends to a much better multi-year outlook on the farm side than, let's say, the construction side.